Have you ever looked at a company's financial report and felt well, like you needed a decoder ring to figure out what the numbers really mean for its future?
Oh, absolutely. It's like trying to find the actual story buried in a spreadsheet, isn't it?
Exactly. Those official documents, the earnings
Yeah.
calls, they're packed with data, yeah. But the
Yeah.
real insight that comes from connecting the dots, seeing the bigger picture.
Seeing the strategic narrative behind it all.
That's precisely our mission today. We're doing a deep dive into the recent Q1 FY26 financial results of Ganesh Housing Corporation Limited GHCL. They're a pretty prominent real estate developer based out of Ahmedabad, India.
Hmm.
We've got our hands on their official board meeting outcomes, the detailed financial statements, their earnings presentation, and crucially, insights straight from their latest earnings call.
Quite a bit of material to sift through.
Yeah, and our goal is to really unpack their performance for the quarter ending June 30th, 2025. We want to understand what these figures truly tell you, our listener, about their business, their projects, some quite ambitious ones, and their overall strategic outlook.
And just for clarity, to make it a bit easier for everyone following along, we'll be converting the figures they report in lakhs and crores mostly into millions of rupees.
Good point.
Just so you know, 1 lakh is 0.1 million rupees and 1 crore is 10 million rupees. So yeah, all the numbers you hear from us today will generally be in millions. Makes it a bit more straightforward, I think.
Definitely. We know you're looking to get informed quickly, but thoroughly too. You want to cut through the jargon, get to those aha moments. So let's dissect this. Let's see what truly stands out.
Okay.
First up, the initial numbers for this Q1 FY26. What did the board announce?
Right. So the board of directors met on July 21st, 2025. They considered and approved the unaudited standalone and consolidated results for the quarter.
And importantly,
Importantly, their statutory auditors gave them a clean bill of health, a limited review report with an unmodified opinion. So from an auditing perspective, everything seems to be in order.
okay, good. So looking at the consolidated overview, management themselves called the initial snapshot a bit muted, right?
That's the word they used, yes. Consolidated revenue from operations came in at about 150.8 million rupees for Q1 FY26.
And how does that compare?
Well, that's where the muted part comes in. It's a pretty significant drop, down 42% from the previous quarter, Q4 FY25, which was around 251.4 million. And it's also down 32% compared to the same quarter last year, Q1 FY25, when they reported about 214.1 million.
Okay, so revenue's down quite a bit. What about profit?
Similar story there initially. Consolidated net profit, or PAR, was 9.3 million rupees. That's down 44% quarter on quarter and down 18% year on year.
Hmm?
Basic earnings per share naturally saw a corresponding decline, down to 11 rupees 16 paise. And consolidated EBITDA, that was 12.8 million rupees, down 42% QQ and 18% YOY.
And you mentioned the standalone results.
Yeah, it's worth noting briefly, the standalone results actually showed a net loss of about 10.4 million rupees. So it really highlights how much the consolidated entities, the subsidiaries and associates contributed to achieving that overall positive bottom line.
Okay, so we've got declining revenue, declining profit, but then something really surprising jumps out from the report. Their margins actually expanded. How do we square that circle?
That's exactly where it gets really interesting. You're right. Despite those headline drops in revenue and profit, GFCL saw significant margin expansion.
Significant how?
Look at EBITDA margins. They expanded to a huge 84.8% in Q1 FY26. That's a massive jump from 70.5% in Q1 of the previous year.
Wow, 84.8%.
Yeah, and PAT margins also expanded significantly. They hit 61.6% in Q1 FY26, up from 51.6% in Q1 FY25. So this isn't just a tiny bump, it's a really dramatic improvement in how much profit they made per rupee of revenue, even while the total revenue shrank.
So what's the story then? What's behind these seemingly muted numbers, but these surprisingly strong margins? What did management say on the earnings call?
Okay, so management explained that April and May definitely saw a somewhat cautious sentiment in the Ahmedabad real estate market. Fewer new projects were launching across the board. Buyers were maybe taking a bit of a wait-and-watch approach.
Any reason why?
Broader economy? Possibly, yeah. They hinted at maybe some broader economic uncertainties influencing things, but they also highlighted seeing a distinct pickup in activity towards the end of June, the last couple of weeks. That apparently aligned with their own internal expectations that buyer sentiment would start turning around mid-year.
Okay, but the margins, how did they get so high?
Right, the key point here and what explains that margin expansion is where the Q1 income came from. Almost the entire income for Q1 FY26 came from their Gujavi Township project.
Ah.
Specifically, it came from monetizing land through plotting schemes. And selling plotted land tends to be a very, very high margin activity compared to, say, selling constructed apartments or commercial space.
So they leaned on high margin land sales during a slower quarter for project sales.
Exactly. It essentially acted as a profit anchor, boosting the overall margin percentages even though the total revenue from active project construction and sales was lower.
Okay, that makes sense. So we've dissected the Q1 numbers, but to really get a handle on GHCL's path forward, we need to look at what's actually being built, right? What's in the project pipeline. That's where the future revenue is going to come from.
Absolutely. That's the engine room. So starting with their ongoing projects, they've got Malabar Retreat. This is a premium residential development.
How is that progressing?
It's at about 43% completion overall. Structure work is largely done for the initial towers. And a really crucial milestone they mentioned was the sample flats being ready.
Ah, that usually helps drive interest.
Precisely. They said it led to a clear uptick in footfalls and bookings. They've apparently already booked 30% of the units, which is pretty decent at this stage.
And they expect more momentum.
Yeah, management expects things to get stronger from Q2 onwards, especially, with the festive season coming up later in the year. Average price realization there is around 6,000 rupees per square foot.
Okay. And then there's the big one, the Million Mines Tech Park Phase 1. That's their IT SEZ project, right? An IT special economic zone.
Exactly. Designed to attract tech companies with favorable policies, good infrastructure. And this one, Phase 1, is really getting close. It's nearing 90% completion.
90%. Wow. So focus shifts to leasing now.
Entirely. And it sounds like it's going very well. They reported that an impressive 80% of the leasable area, that's a 0.85 million square feet, is either under active discussion or already has concluded letters of intent or expressions of interest.
Who's interested?
A strong mix, apparently. Global capability centers, GCCs, hybrid workplace providers, and various tech firms. Fit-outs are actually set to begin this current quarter, Q2 FY26.
And when do they expect rental income?
Lease income should start flowing by Q3 or Q4 of this fiscal year, so pretty soon. Estimated rentals are looking good too, around 70 to 75 rupees per square foot per month, which, management pointed out, is actually a bit ahead of their earlier estimates. They also highlighted it's a platinum sustainable project, so high environmental standards with significant spec upgrades. They're quite proud of it, calling it potentially the best building as far as Ahmedabad, Gujarat is concerned.
High praise. And they're already thinking about Phase 2.
Yes. They mentioned they're working in parallel on planning for Phase 2. Given the strong demand they're seeing for Phase 1, it makes sense. Phase 2 will be almost identical right there on the same campus. So that could significantly boost their leasable commercial area down the line.
Any other new projects?
They've recently added one called One Saltej to the pipeline. This is another commercial project, pretty sizable, with a saleable area of 1.8 million square feet.
Where's that at?
It's currently in the planned processing stage. They expect construction to kick off post-monsoon this year. The estimated lifetime revenue generation for this one is pegged at around 21,000 million rupees.
21 billion rupees.
Okay.
Yeah, substantial.
And let's circle back to the Gujavi Township, that huge 250-acre development that drove Q1 income. You mentioned the high margins from land plotting. What's their long-term play there? It sounds massive.
It is. They're using a hybrid strategy for Gujavi, so partly doing their own plotting schemes like we saw in Q1, but also doing bulk land sales to other reputable developers. In Q1, for instance, they sold about 10 acres. And the average price they got was around 30,000 rupees per square yard, which they noted was much higher than what we had envisaged earlier.
So land value is appreciating nicely there.
Seems so. And their long-term vision for Gujavi is really quite grand. They want to transform it into a self-sustained urban micro-market over the next 7 to 10 years.
A mini city almost. Kind of, with an estimated total sales potential from the whole township project exceeding 50,000 million rupees. So over 50 billion rupees. That's a huge long-term growth driver for them.
It's clear they're not just planning these things. They seem to be executing pretty well, too. Didn't they mention some completed projects?
They did, yeah. They highlighted Malabar Exotica, which was completed 10 months ahead of schedule. Apparently, it received national acclaim as India's top tech structure for 2023 by ICI,
Oh, we saw that. Yeah.
Indian Concrete Institute. And it was even endorsed by the Prime Minister, Shri Narendra Modi, for its innovative precast technology and safety standards. So quite a feather in their cap.
Definitely. Any others?
Also, Malabar County 3. delivered well ahead of time within just 2.5 years. Also use precast construction tech, which seems to be a key part of their rapid execution strategy.
Mm.
And they also mentioned their community engagement aspect, pointing to the Lalita Govind Udyan. It's an 8-acre public garden inaugurated by senior government officials, and it's strategically located near GHCL's own projects.
What's special about it?
It features a tranquil lake, a Miyawaki plantation that's a technique for creating dense, native forests quickly with 40,000 trees and various recreational facilities.
Hmm.
It sort of showcases their commitment beyond just building structures, embedding themselves in the community fabric.
Okay, so that covers their projects. But beyond the company itself, it's fascinating how GHCL fits into the Ahmedabad real estate market specifically. How does the city itself shape their strategy? Why is it such a core focus for them?
Well, Ahmedabad really has become the powerhouse of Gujarat's real estate scene. It attracts over 42% of all real estate investments in the entire state. That's huge concentration.
Why Ahmedabad?
Several reasons. It's seen as the gateway to Gift City, India's first big operational smart city and international financial services hub. It's also just a major hub for infrastructure growth in general.
And affordability.
That's a key point. In 2023, it actually emerged as the most affordable housing market among India's major metropolitan cities. Its affordability ratio was just 23%, meaning the average household needs to spend about 23% of their income on a home loan EMI for a standard apartment. That makes it highly accessible compared to, say, Mumbai or Delhi.
Right, and livability.
It consistently ranks high among India's top cities for infrastructure and ease of living. People recognize it for safety, cleanliness, civic amenities. It makes it a preferred destination for families, professionals. Plus, it's rapidly becoming a significant tech hub.
Connecting back to their Million Minds project.
Exactly. There's a thriving startup ecosystem supported by favorable state IT policies. So building a big tech park there makes perfect sense.
So the market's generally strong. What are the drivers?
Yeah, the market's fueled by rising project registrations, major infrastructure upgrades like the Metro Phase 2, and just strong investment appetite, both domestic and NRI. Property values are broadly expected to keep appreciating, maybe 10–15% annually.
But what about potential headwinds? Did management address things like inventory levels? I think the report mentioned some fluctuations.
They did touch on that. For instance, there was a reported 74% spike in inventory in the 10 to 20 million rupee price range, while other segments saw drops. Management characterized these as short cycles.
Short cycles, meaning?
Meaning temporary fluctuations that they expect the market will absorb as underlying demand remains strong and eventually picks up again.
But what if that pickup isn't as robust or takes longer? Is there a risk there? And what about competition? Are others cutting prices?
That's a fair point. Regarding competition, management acknowledged that yes, some, particularly unorganized players, might be offering deep concessions or discounts, perhaps if they're struggling.
But they don't see it as industry-wide.
No, they seem to view it as specific to certain players. Their belief is that in the current market, demand is increasingly shifting towards established, branded developers known for credible execution and creating well-planned communities. They feel homegrown brands like Ganesh will thrive in that environment.
So, banking on their reputation and track record.
Essentially, yes. And their strong financial position, which we should definitely talk about, gives them a significant buffer to navigate these cycles. They also mentioned economic sentiment, noting that broader uncertainties did influence Q1 initially, but they see green shoots now and expect potential interest rate cuts down the line could further boost buyer confidence.
Okay, this brings us to a really important question then. How is GHCL planning for the future amidst these market dynamics? What's their long game, especially given that strong financial position you mentioned?
Right. Their strategic foundation really rests on that incredibly strong balance sheet. They've maintained a net debt-free status for over 3 years. That's more than 12 consecutive quarters. Think about that in real estate, a typically high-leverage industry.
That's remarkable.
It really is. They've actively reduced debt by about 650 million rupees since FY19. It's almost like they've built this financial fortress. And a crucial element is their land bank. All 525 acres they hold are, quote, fully paid for and unencumbered.
Meaning no loans against the land.
Exactly. This gives them enormous flexibility for future growth without needing to constantly acquire new land or take on significant debt for it. It's a massive strategic advantage.
And their stated vision and mission.
Their vision is clear: to be the most trusted, transparent, and admired real estate developer, and the mission backs that up. Continuously innovate and use the latest technology to provide high-quality spaces and set up and build standard processes to establish transparency and gain customer trust.
Sounds good. Do they have the track record?
They emphasize their proven ability to, as they put it, predict growth areas and establish presence ahead of the curve. And they've delivered around 23 million square feet of residential and commercial space to date, so there's substance behind the claims.
So what are their specific strategic priorities now? They mentioned a plan, prepare, proceed approach.
Yes, it involves several things. Building their internal organization, team reorganization, getting everyone aligned, delivering sustainable value, continuing to invest for future growth, increasing their focus on marketing, maintaining that trust, offering customer-friendly homes. Continuous innovation is another pillar, adopting tech like iHomes, home automation, and, interestingly, strengthening their position by becoming more aggressive in the commercial and retail segments.
Broadening the base beyond residential. What does that shift towards commercial and retail suggest about their future focus?
Well, it strongly suggests a diversification strategy, doesn't it?
Yeah.
While residential is clearly still core, pushing harder into commercial and retail allows them to tap into different revenue streams, maybe hedge against cycles in one particular segment. It creates a more robust, balanced portfolio overall.
Makes sense. What about their outlook and guidance? Did they maintain their targets despite the softer Q1?
They did. Management has consistently guided for a 30% compound annual growth rate, CAGR, on the bottom line on net profit. And despite that muted Q1, they reiterated their confidence in achieving this for the full fiscal year, FY26.
That's quite bullish.
It is. They also anticipate that going forward, the majority of their income will come from project sales from buildings like Malabar Retreat and Million Mines rather than purely from land sales like we saw dominate Q1. That signals a strategic shift in how they monetize their assets as these large projects mature.
Any other future-looking points? ESG?
Yes, they mentioned integrating ESG principles, environmental, social, and governance, right into their design and planning phases, focusing on green buildings, responsible land use. That's becoming increasingly important, not just ethically, but also for attracting modern corporate tenants and investors.
And the really long-term target.
Their ultimate goal is to develop approximately 32 million square feet of infrastructure and special projects, including Million Mines and the full Gujavi Township, with a total estimated sales value of around 172,500 million rupees.
Wow, 172.5 billion rupees. That's a multi-decade vision.
Absolutely. It shows the scale of their ambition underpinned by that massive, unencumbered land bank.
Okay, so let's try and wrap this up. We've taken a pretty deep dive into Ganesh Housing Corporation Limited's Q1 FY26 results. We saw those initial revenue dips, yes, but also that surprising margin expansion driven by land sales.
We understood the solid progress on key projects like Malabar Retreat and especially the Million Mines Tech Park, which looks set to start generating income soon.
Right, and we explored their strategic position within that really interesting Ahmedabad real estate market, leveraging its affordability, growth, and tech boom.
All underpinned, crucially, by that strong, debt-free balance sheet and a very clear, very ambitious long-term vision centered around that huge land bank.
So here's a final thought for you to ponder. As Ahmedabad continues on what seems like a structural positive growth path, and as housing demand increasingly shifts towards trusted, branded developers, what does GHCL's strategy balancing these cautious project launches, holding significant land reserves, and now shifting towards more project-based sales? What does that tell you about the future of real estate development in India's booming urban centers?
And maybe related to that, how might a company's ability, like GHCL's, to effectively wait and watch the market sometimes, even with approved projects ready to go, backed by that financial strength? How might that become a key differentiator, maybe even a competitive advantage, in potentially volatile economic times ahead? Something to think about.